Good morning. It is November 11, 2014. It is Veterans Day. It's a Tuesday, and stock futures are starting today on a positive note. Look at this rally we've had since the lows. It's been almost a month since the bears came out and said this was a bear market, and the market again reversed course, even more so than the August 9th lows when the same bears were calling for a bear market, and we rallied. Look at this nasty rally to the upside. We're back in a nice uptrend. Every single dip, and I'll say it, I've been saying it in all my videos for the last couple of years, every single dip since the lows of March 2009 has been a great buy the dip opportunity, and the dip almost a month ago has proven to be the best dip to buy that we've seen in a long time. Look at this rally that we've had. At some point, it's going to run out of gas, and maybe we'll see a bit of a pullback, but when that happens, it's going to be tough to time. Let's look at some individual names. Look at Baidu. Baidu was up big yesterday, up almost 5%, and back a year and a half ago, almost 2 years ago, I was talking about this stock consolidating here. The analysts were very negative about it. It was down below 80 bucks. I said it was going to break out over 100. This is going to become a momentum stock again. And look at the rally it's had ever since. You can see the break there. You can go follow it on StockTwits, where I was talking about it back in January and February of 2013 as it was consolidating, and I said it was going to make a move up, and it has. Look at this move up to record all-time highs for Baidu. Same with Whole Foods. Let's talk about Whole Foods. The last couple months, how it was at its support here, how all the analysts were negative about the stock like they were for Big Lots. Look at Big Lots at the start of the year. I was talking about Big Lots at the start of the year, down here in this big red circle when it was at about $26. And I said, Big Lots, the analysts are very negative on the stock, and look what it did ever since, up over $20. It's hitting resistance now. I'm actually in some big puts for a pullback here, a head and shoulders topping pattern up against long-term resistance. With Whole Foods, we're looking at that $50 figure. We're almost there, and I was talking about it just, a mere month ago, saying it was going to hit $50 a share. Almost there. I mean, $1.40 away. Beautiful spike up post-earnings. Hit support, so yeah, I'm not right all the time, but what I am. Same with Nuss. I was talking about Nuss at the start of the year. Was it $136, $137? Look at the decline it's had ever since. It's a beautiful topping pattern here, breaking down to multi-year lows here for Nuss. Let's look at some individual names. FCX, I was talking about this one in years past as a head and shoulders topping pattern. Took a while to come to fruition, but there you go. We hit support here. We're coming back down to this support. We break this. We could be looking at, as crazy as it sounds, back to the lows we saw in 2009. Now this is split adjusted. Did a 2-for-1 split. You're looking at possibly down to those lows, $7.50, $10. Wow. Pretty wild to think about. Gold is just hanging around here at this long-term trend line support resistance line. We could see a break below this. This is going to bring on 85. That would be a sight to behold. GDX, which continues to break down almost to 2009 lows. Look at this. The miners are getting killed. I see a lot of people talking about, hey, you know what? The next is XLE Energy Stocks, which is above the $80 level we saw at the lows about a month ago. That was support. Look at this candle. Look at the wick on that candle. That is huge. We're up here. We could see a move back down. This almost reminds me of the flash crash candle that we saw with the Dow Jones Industrial Average and the S&P 500. We kind of flash crashed. We bounced back up, and then ultimately we came back down to these prices anyway before bouncing and resuming our ascent. I think that's something we could look at. And the one thing that you would look possibly, if we don't hold this level on USO, which is the ETF that tracks oil here, and you can see we're right at support. I was talking about this many months ago, and also a couple weeks ago. The $29 level acted as support briefly a couple days ago. We bounced. Again, we're going to approach this level. We're down almost 2% here. This is going to be an important line to hold. Look at this. We're down $10 just over the last couple months. That's an enormous move to the downside for USO. At some point, this is going to reverse sharply, and I think this $29 level is going to act. And if you look back, that's a 2-year low. Go even further back for USO, and you're looking back to the middle of 2012. And when it did hit this $29 level back in 2011 and 2012, it bounced significantly 35% move here. And if you look from 29, you're looking at a 50, almost 52, 53% move to the upside in 2011. So we're going to see a really quick snapback to the upside for USO. How about Google, which is holding that, and I like Google, which is Googl. We briefly broke below this trend line. We're back up over the 550 support level. This looks good for the stock to break out to new highs here. And let's look at just a couple more tickers, and then I'm going to go into earnings. I'll do a separate video for that later on. But I do have one earnings report here tonight. I just want to go over the chart here. We are respecting this trend line here for Fossil earnings after the bell today. Let's see where this goes after the bell. Fossil is reporting earnings, and historically has been made some really nasty downturns in the past, middle of 2012, from 135 down to 80 bucks in the span of a week. So are we going to see that? I would look for support here at about the 87 level. Let's look at a stock. And then again, I brought up big lots. I'm in the puts here. Just briefly, I just want to bring up a short-term chart to show you what I'm looking at. I'm looking at a possible head and shoulders pattern. Although yesterday and the previous couple days trading action is starting to negate that. There on the right shoulder. This would be a right shoulder. Left shoulder, this is the head. To top it off, we're in the top of the channel. So we're looking for a move back down to 40. I've got the 42.50s and the $44 puts that expire next week. That's big lots. Some stocks that are moving out to the upside in a big fashion. Financials, Goldman Sachs is breaking out to a multi-year high. 3M breaking out to record all-time highs. JP Morgan Chase broke out to a record high yesterday, all-time record high. So stocks are doing well here, and you know what? The trend remains to the upside. We're over the Abenomics trend line. Remember, we broke below. There's a beautiful V-bottom. I've been talking about this for years. The V-bottoms have been your friend, especially off support trend lines here, like the Abenomics trend line. It goes back to November of 2012. We broke below it recently on that big sell-off, scared everybody out of their long positions. I was actually buying some puts, and you know, when you see a sell-off like this, and you see basically a flash crash in the bond market, and you see the spreads even on some of the normally tight stocks go spastic, something is awry, and yet here we are, record high stock prices. We'll see if this continues. The trend remains to the upside. That's it. Why fight it? Why fight this trend? Every day we're up. Every day we're up. And if you're complaining and crying about it, it's because you're not in or you're short it. You know what? We're in this market to make money. So if the central banks want to print money and make us all money, hand over fist buying call positions, then that's what we're going to do. We're not going to sit there and cry about it. If you're crying about it, you're losing money or you're just not participating in this beautiful, possibly once-in-a-lifetime rally here. We're over 204 here pre-market. It's about 2.5 hours before the market's going to open for trade. I'm going to do a quick earnings video, maybe an outlook. And I'll be back. I'll see you in the chat room at optionmillionaires.com. It is Tuesday. It is Veterans Day. There's not enough quotes or content to thank all those who've risked their lives for the safety and freedom of all of us. And, of course, we take it for granted every day. One single day out of 360 plus just does not do justice for them. But all right, happy Veterans Day. I'll see you in the chat room at optionmillionaires.com. We'll see if this trend here for the S&P 500 continues. The dollar-yen cross. Let me pull that up real quick because that's been coinciding with this rally. You pull up the dollar-yen cross. Look at the dollar-yen. Look at this. We're up over 100 pips. Massive rally over the last, since the lows really, that we hit over just about a month ago. And look at this rally in the currency market. That is not... you don't want to see currencies moving like that. And if you look back to the Abenomics low, we were at 78. All right, UPB. I'll see you all in the chat room. Goodbye.